Chris, thanks for joining us on GB News.
Hello.
First of all, I don't know if you heard there our business and economics editor Liam Halligan saying that, in his opinion, politically, you got it wrong when you gave tax cuts to the rich. The optics of that do not look good at a time when a lot of people are struggling at the other end.
Well, a couple of points to make on that. I mean, firstly, if you look at the growth plan measures announced by the Chancellor last Friday, only 1/20th, that's less than 5%, were the removal of the top rate of tax. Most of those measures were things like cutting the basic rate of income tax, reversing the national insurance increase, reducing or keeping low taxes on companies, which benefit, everybody. The income tax cut and the national insurance cut benefit every single worker, 30 million people in the United Kingdom. The energy intervention was very important as well. We're making sure that people don't suffer those £5,000, £6,000, £7,000 bills they feared just a few weeks ago. We've made sure the British public don't suffer from those terrible energy bills. So almost everything in that package was targeted at sort of the whole country, not just a few people. That's the first point to make. The second point to make on the 45p specifically is that we want to make sure the United Kingdom is internationally competitive for personal tax and for corporate tax, because many companies and also very successful people have a choice about where they locate. They don't have to come to the UK. They could locate in New York or they could locate in Singapore. We want to make sure they choose to come and grow in the United Kingdom, which is good for our economy. It'll create extra jobs. It'll ultimately pay more tax revenues to fund the NHS, education and the police as well. So that is the rationale for doing it.
The impact, though, was not, I imagine, what you expected. Why was it that the economy, the markets, got left in a state by which the Bank of England had to intervene to avoid what they said would be a material risk to financial stability?
Well, the Bank of England yesterday used their independent powers to make a very specific, targeted and time-limited intervention in a rather technical part of the market. It was the long end of the gilt curve and the way that interacted with certain kinds of very particular pension funds. They did that and it was successful. Other central banks in recent days have intervened as well. In fact, the Bank of Japan just a few days ago made a very particular intervention in the yen-dollar market. But the reaction I thought was most important to the growth plan was from British businesses, from the CBI, the Confederation of British Businesses, from the Federation of Small Businesses and from the British Chambers of Commerce, who on Friday strongly welcomed this growth plan because they know that their members will be able to grow more quickly, invest more, create more jobs and higher paid jobs as a result of this growth plan. And that is the reaction I think that is the most important one, because it'll put this country on the path to higher growth, which is good for families and households because it'll mean more jobs and higher earnings, and it'll be good news for public services because it'll generate a more sustainable tax base to fund those critical things like the NHS, education and the police.
We've had the Institute for Economic Affairs on this morning, who are normally very supportive of Liz Truss and her brand of economics, and they're supportive of what you're doing broadly. But the one criticism that they said was the way in which you conveyed that mini budget without issuing a forecast from the Office for Budget Responsibility, without giving those reassurances around the figures and how you're going to fund this. That was why the markets were jumpy, and that perhaps you could have communicated that message better. Do you accept that?
Well, I think markets globally have been volatile for the last 6 or 9 months, mostly as a result of Putin's illegal invasion of Ukraine. On the question about the OBR, we are obviously going to be publishing an OBR full scorecard on the 23rd of November. Into that will feed not just the Friday measures, but a series of supply-side reforms, so reducing the burden of regulation on business, for example, that are going to be announced in the coming weeks. The Chancellor will also set out his medium-term fiscal plan, making sure that debt to GDP falls over the medium term. And we should keep in mind, of course, that debt to GDP in the UK is already the second lowest in the G7. As Chief Secretary, I can tell you that we're going to be having iron discipline on sticking to the existing spending plans. That's very important, and we're going to make sure we firstly find the efficiencies to let us do that, but also make sure we prioritise public spending, which is of course all funded by taxpayers' very hard-earned money. We prioritise that on the most important frontline public services and also things that are going to drive economic growth.
You've mentioned global factors there, but we also know before Putin's invasion in January of this year, inflation was at a record high. It can't all be answered away, that easily. How much responsibility does the UK government take, the current UK government take, for the state of the markets and the value of the pound today?
Well, I mean, look, inflation has been a problem globally. Interest rates have been rising globally for the last 6 or 9 months. And in fact, they've gone up by more in the United States than they have here. What we can do as a government is make sure that we protect British citizens from the worst effects of the energy crisis, which we did with our decisive intervention, protecting every single British household and British business. We need to make sure we've got a growing economy, to make sure wages are rising. That's our responsibility, and that's what the Prime Minister and Chancellor have been doing in the last couple of weeks.